what might the process be for somebody that does think, hey, one day I do want to buy a lot and build a house on it? Where might you suggest somebody start in that process?
Don't wait until you're ready to build. I would start now. If you think that's something you want to do in the future, you need to meet with a lender and get your arms around how it works. The earlier you talk and know how it works, so that when you're ready to move ahead, you're in a great position to just get approved.
Welcome to Lawrence Real and Local, Keeping It Real podcast presented to you by the Lawrence Board of Realtors. We're your go-to source for all things real estate in Lawrence, Kansas. I'm Lexie Haskin with Vista Bank.
And I'm Patrick Dipman with McGrew Real Estate. Together, we are here to make the journey to homeownership a breeze. Join us as we share insider insights, expert advice, and a dose of fun along the way.
This episode was brought to you by...
When it comes to protecting your biggest investment, Gutter Princess and Roofing LLC doesn't cut corners. This local, woman-owned, and veteran-operated company specializes in residential and commercial roofing, seamless gutters, cleanouts, and exterior repairs. Realtors love them for their quick response times, honest pricing, and smooth inspection repairs that keep closing on track. If you want it done right the first time, call the team that treats every home like royalty. Gutter Princess and Roofing LLC, your Lawrence local experts.
Welcome to Lawrence Real and Local, Keeping It Real podcast by the Lawrence Board of Realtors. My name is Lexie Haskin with Vista Bank.
And I'm Patrick Dipman with McGrew Real Estate.
And we are joined here today with Michelle Fales with U.S. Bank. Welcome.
Thanks.
Well, great to be here.
So I've worked with Michelle in the past too. So having her on here, I mean, she loves construction. She'll tell you that too.
It is my favorite.
Yeah, thinking about having someone on for this episode, it was like, let's get Michelle on. She loves construction. Like, let's do it.
Yeah.
let's do it. This is her thing. Well, she has many things, but
Construction's my favorite.
This is a very specialized area. And who doesn't want to dream a little bit about building something one of these days?
Yeah.
Yep. And so we just make sure that they know whether they can make that reality.
Yeah. Well, tell us a little bit about your background, like how long you've been in lending, what you've, just like you.
Okay. Started in actual lending and student loans. Worked for Sallie Mae for 11 years. And then went into banking in 2000. And actually started as an assistant and just worked up the ladder as a consumer lender, commercial lender, learned construction, did it all, mortgages, and then switched over to just mortgages, construction loans, lot loans. Now we're going on 7 years ago. And so I think all told, we're now at 37 years in lending. And that just means I started at the age 5. But no, I've seen it all, done business loans and everything. I like business loans and I like construction loans the most because they're different. Yeah. If you work mortgages, whether you're doing an FHA loan or a conventional loan, really all that changes is the loan to value, the debt to income, and the rate. Yeah. And, every now and then you get some nice surprises. But with construction loans, you're working with the customer. It used to be 9 months, but now we're looking at a year to 2 years with the houses being built. And you're working with them every month or more on their draws and really getting to know them. You get to know their families. And some of my best friends these days are construction customers that I met through the years.
Wow.
Yeah, and still keep in touch.
So why do you think these loans might feel so intimidating to buyers or just consumers in general?
Well, they're not your traditional, installment loans like we have with the mortgage. We pay the same amount every month, and then it gets paid in full. With a construction loan, it can be a one-time close where you're just doing the construction and the then permanent loan at one time. But during construction, you're making draws. And so you're not, let's just hypothetically say $500,000 loan. You're not using that $500,000 right from the get-go. You might be using $100,000 the first month, $80,000 the next month, and payment amount changes every single month based off of that interest. And it has to be underwritten differently. And then because every construction loan has surprises. You have to look at reserves. And so just every little step of that can be intimidating to someone who's never experienced that.
Yeah.
And so the key is to work with not only a builder who is experienced, but also a lender that's experienced in that. And just they will lead you along every step of the way. And that's kind of where, it allows that relationship building that I really appreciate. And every one of them's different.
Yeah.
And so I like that, just creativity.
It sounds like along the way, pretty much everybody who's a key player has to be pretty detailed, though.
Very much so. I mean, we vet our construction companies up front. You want to make sure that you have a construction company that has the experience. They know how construction loans work. So they're not getting frustrated, and that they have a history of communicating, whether it's change orders or delays with their clients, because you're kind of that conduit to calm them down if things don't go as planned. And so it's important as a lender to build those relationships, not only with the customer, but also with those builders. So when items happen, you get a call from the customer and it says, I'm over budget, I didn't expect this, and they're really frustrated. You just call in the builder, have a 3-way conversation, and get everybody back on the same page. And I've had to do that many times through the years, and you just get it finished.
Knowing that there is a lender working with a detailed builder, and now putting me in the buyer's position, let's go back to a $500,000 loan.
Okay.
If I have $100,000 that's saved up for this, and I want to build a $500,000 house, do I use my $100,000 first, and then there's a loan piece that comes after that?
Right. So let's say the whole project is $500,000, and you've decided to put $100,000 in. So that's depending on the bank, 20%. There are banks that will go as high as 95% in town, and some a little lower, 75%. With the construction loan, you always put your, quote, skin in the game first. It's no different than when you buy a home. You put your down payment in first before the money is given for the loan. And that is not only to the lender's reassurance, but it's also a benefit to the client, because that money they put in is not accruing interest. And so they're not drawing money on that project until a later time. Therefore, they're not being assessed interest until it actually is needed. And so I explain it to them that way, and they understand. Now, I have a project right now. It's a little different. The customers bought land 2 years ago, and they took out a land loan, but they've since paid it off. So now they have land that's worth quite a bit. So let's just say $800,000, and they're looking at a very big project. And that $800,000 is already their skin in the game. They don't have to put another 20% in on top of that, or whatever the down payment requirement is by the lender.
So my land I own, if I own it outright, that counts for something.
Definitely.
So yeah, I could even add this up potentially. That counts for something, but let's say I still need a little bit more. I'm just not starting from the 100,000 like square one. I can include a little bit of my land value too.
Right. So in that case, if you don't plan to inject any additional cash, you're using the bank's money from the get-go. So you've already paid for your land. That's your equity in. Your loan to value is most likely, with the value of land in Douglas County, much lower. And then you start drawing based off of builder draws every month. That being said, if you're pretty liquid, and let's just say the draw comes through and it's for $100,000, you don't have to draw the whole $100,000. You could inject and say, I'm going to put another $20,000 of my own cash in, and let's just draw $80,000 against the loan. And that, therefore, they have a lower balance at the time of completion. So
you mentioned builder draw. To a listener, what's a builder draw? Okay,
so a builder will do, and every builder's different. Majority of the ones will do one-time draws a month. And so what happens is got a piece of land, start building. First step is site work, foundation, basement or not basement. So the bill comes into the builder for that, for whatever has been done. And then on top of that, the builder, depending on their agreement, might assess a portion of their builder fee. Some wait till the end, some collect it every month. It's kind of like getting a paycheck every month. So they prepare a draw, is what we call it. So it's just a piece of paper, an invoice, let's just say. Put together all the cost, and they will send it to not only the client, but the lender. And then the lender will go out and do an inspection at that time, make sure the work that's being billed is completed. If it's not completed, then there's a conversation to be had. Is it appliances that just haven't been delivered at this time? What is the reason it's not there? And the lender has the ultimate decision of whether they give that money out if it's not done. It just depends more on the loan and the person's situation. If the loan to value is low, they're going to be more apt to approve that. While if it's a real tight project, which I've done through the years, you might just hold that back and say, you know what, that's not going to be paid right now until some more work's done. And then a check is cut to the builder, not to the borrower. And then the builder, depending on the builder, they might do paper lien waivers or they might do check lien waivers. And what I mean by check lien waivers is builders will get checks that where we normally would sign the endorsement, it has a actual lien waiver clause, and they're basically confirming that they have paid all these bills to date. And the lender's biggest concern during construction is that all the bills be paid, because at the end of the construction, an updated title policy is pulled, and if any bill is not paid and a contractor decides to file a lien, then that stops the whole deal, where the lender can't convert that to a long-term 15 or 30-year note. So we do them, and every lender I've ever worked with has do them every month along the way, and it falls back on the builder if that's not paid. They have to provide evidence that it's paid.
Very helpful.
I was going to say, let's go back a little bit. There are different types of construction loans. And so can you explain the difference between a lot loan, a construction loan, or even a construction to permanent loan?
So lot loan, that is just what it sounds like. You're going out, you're buying a piece of land, you're buying a lot in a improved area, and you don't plan to start right now on construction. You just want to finance it, get your hands on that land so that down the road you can build on it. That puts a lot of responsibility on the lender, because the worst thing you want to do is have a client buy land with the whole hope of building on it, and they can't build on it down the road.
Yeah.
So when I'm looking at a lot loan, I'm going, okay, not only can they afford the lot loan payment, I will have that conversation with, well, if you built today, what dollar amount are we looking at? And we just kind of do a upfront calculation to make sure that down the road, they're not stuck with a piece of land and they can't get a loan for building on it. So it's kind of a two-step. Construction loans are a little bit more difficult only because the rates are higher, and depending on the lender, the term can be shorter. There's some lenders that will go only 10 to 15 years. Some will go 20, and there's some that will go 30 years.
Yeah.
And then the rates normally are not fixed for the whole 30 years like you and I are used to with our home purchases. And so if I buy a piece of land and the lender puts it on a 3-year adjustable rate, and the rate could go up or down in 3 years, then I have to basically stress test it also. And what I mean by stress test is I'm calculating, let's say the rate goes up by 2%. Can they still afford this payment? Because they may not build on it in the first 3 years. The hope is they do, because you want that construction loan, but they may not. And so there's a lot of steps on on lot loans.
Yeah.
And then there's the construction loan. And that's where you're working with the builder. you've got a cost estimate, you've either worked with the builder who does their own plans, or you've hired an architect to get the plans, and they prepare a cost estimate. They prepare the specs. They sit down and go, do you want wood floors, or do you want carpeting in this room? How do you want to finish the walls? What kind of light fixtures? And they go through every spec in that home to prepare that cost estimate. And that's used by the lender to not only determine loan amount, but it's also used by the appraiser. So the appraiser's going out, and they're not looking at a house like a typical home loan. They're looking at a plan and cost estimate. They're taking a picture of an empty piece of land, and then they're having to do comparables. Okay, if this house is built according to specs, what's it going to be worth in this neighborhood? And so if along the way the client says, oh, I don't want those wood floors, I want to put in linoleum. I'm just saying that, and I don't know if anybody truly uses linoleum anymore, but it shows my age there.
Roll it out.
Then that's going to decrease the value of the home because they're looking at resellability. And so when someone makes a change order like that, the lender has to track that and update the value accordingly and adjust the loan accordingly if needed. And so, but with a construction loan, the lender looks at the plans, the cost, how much cash you're going to inject into it. Does it conform to that bank's construction policy? So as I stated earlier, there's some that will only go up to 75%. And then I've worked for a lender that will go as high as 95%. And so it varies. And so you got to make sure but then you also look at what kind of reserves do they have?
Yeah.
Because you're looking at those cost overages. And if, a delay happens or they come across in the site work to rocks and it cost $10,000 more to get that foundation in.
Because there's always surprises.
Right. And my loan is limited to a certain amount. Where's that amount money coming from? And so reserves are very important. If they're using every ounce of their money to get into that construction loan, it may not be approved. So that's the hard thing with construction loans. So
with construction loans, the builder can hold it or the buyer can hold it, correct? And it's just how it's structured.
It is. The builder could do it. Builders sometimes will do it. I know of a builder here in town that prefers to finance his own because he doesn't take loans out for it, but he charges as if he does take a loan because he's using his own money, and rightfully so.
And it's a risk.
It is a risk. And so he looks at himself as the bank in that case. While if it was a builder who takes a construction loan out for every project, spec or custom, they already know what their rate is normally with the bank. And so when they put their cost estimate, it has an interest line based off of how they assume the draws are going to come through. And so some builders will never put it in their name. And they just don't even want to go there. So they make the client put it in their name. So every one of them differs. And it's just getting to know your builders and how they prefer to handle it. I've, probably worked with 40 builders through the years here in Douglas County and kind of knew how each one. Every now and then they'd go, oh, well, this one I'm going to do this. Oh, we're going to do it a little different. So it's getting to know it. But they're intimidating to customers. They're like, how does this work? How am I going to know every month if I should approve that draw? And I'm like, that's what I'm here for.
Yeah.
And I am. I'm holding their hand every step of the way.
If somebody, you mentioned an appraiser and looking at it, let's say I'm starting out carpet and I'm wanting to upgrade, I still would run the risk that maybe that wouldn't change the appraisal as much as I might anticipate, and I would have to figure out how to bridge that gap?
Possibly. So that's where the lender would have a conversation with the appraiser and just say, hey, they're changing from this. Do you think that's going to change the value of the house? And if it's only changing by $1,000 or $2,000, will the customer want to pay for a new appraisal? But if it's increasing the cost quite a bit, they'll most likely want just an updated appraisal done. And it's not a full appraisal cost normally. The appraisers are pretty fair with that here in town, but they will assess a charge for that, for a change order. And you just get an updated appraisal and then do a modification to the loan.
Interesting.
Yeah.
Yeah.
So let's go into construction to perm.
Okay.
What does that look like?
That is what I call a one-time close. So going back to the construction loan, I build the house, and then at the end, the lender should be tracking.
Yeah.
I always used 45 to 60 days before completion is, and I get in touch with the client and say, okay, we need to start looking at your end loan. Do you want to do a 15? Do you want to do a 30? What are rates today? Do you want to lock that? Just like if they were going down the street and buying a house on the block. But the difference is instead of going through a title company to basically buy a new house, the money is paying off the construction loan.
Yeah.
So that's what we call a two-time close. And then you have a one-time close, which is where the client determines the loan amount and the rate from the very beginning. And they only sign papers once. So construction, two-time close, they're signing twice.
Yeah.
Once for the construction loan, once for what I call the permanent loan. And then construction to perm, it may be, so for example, we have the option of when someone goes construction perm, do they want to do an ARM because they think after a couple of years they're going to want to refinance it? Or do they want to just set that long-term note?
And an ARM is an adjustable rate mortgage.
You got it. Yeah. But they just sign everything from the get-go. Now, there's some positives to that and there's some negatives to that.
Yeah.
Rates tend to be a tad higher than if you were to go out today and just buy a house because it's hedged a little bit, not knowing what might happen in the future with rates. So then at the end of construction, it just automatically gets converted to your long-term 15 or 30-year note. Now, at the end of that, if, 6 months down the road, it's worth it for you to refinance, nothing prohibits you from that if rates are considerably lower than what you locked in prior to construction. But they're one-time close and two-time close is what I kind of call them.
So what would be the pros and cons of a one-time close and a two-time close then? Because, what people have, and I know this is just probably one of the things they say, the one-time close, you just have one set of closing costs versus two-type close, two closing costs.
Right.
Yeah.
So that's one advantage to the one-time. One is just the convenience. The other is I know what my rate is going to be at the end of construction. I know if it's higher than what is going on, I can refinance down the road. With a two-time close, you go into with a construction rate, and those tend to be higher than a purchase of a home rate.
Because of the more risk.
More risk. Banks got to make money. They're going out doing inspections every month, doing all additional paperwork that a normal mortgage doesn't have. Time, talking with the customer and the builder on a regular basis to keep on top of the project. So there is a lot of more manpower costs than you would ever have with a straight mortgage. The downside to a two-time close is with most lenders, you cannot lock your rate at the time of construction when you start construction. So if it's a 2-year project with some big houses, could be, that lender has no idea what rates are going to be in 2 years.
Yeah.
I mean, if
sometimes
we
they're
look
changing multiple times a day.
Exactly. So if we look at what rates have been doing in the last couple of years, if a lender locks that rate 2 years ahead of time, they could be losing money, or that could be totally to a disadvantage of the customer. So it could be an advantage to do the two-time close because the rates might be lower, but it could be a disadvantage because the rates could be considerably higher than if they adjust the one-time close. And so it's kind of just being risky, taking a chance. And that's where, as a lender, you're communicating all the way during construction. Oh, just let you know, rates are doing this. And I could look at a 75-day lock or a 90-day lock. Might be worth it, just depending on what's happening.
Yeah.
Or let's wait until it's a little closer. And so that's kind of the risk there.
Yeah.
What might the process be for somebody that's just listening here right now and does think, hey, one day I do want to buy a house or buy a lot and build a house on it? Where might you suggest somebody start in that process?
Well, the first thing I would say is don't wait until you're ready to build. I would start now. If you think that's something you want to do in the future, you need to meet with a lender and get your arms around how it works. I have a young couple now that cannot find the house that they're looking for. So they contact me. Had them approve 5% down, straight purchase. I think we're going to just switch and we're going to buy some land and we're going to then build. And I said, let's stop. Let's go over and I said, different animal. That's what I always call them. They're different animals.
Different animal.
And I went over how the lot loan would work and how much more they have to put down on land than a traditional buy. And then I talked about the construction loan and having reserves. And they were like, not going to work for us. Maybe down the road. And I said, now you know. So 3 years down the road, 4 years, when your situation has changed, maybe you can build. But it's really planting the seed early because the reserves are a big player on construction to the lender. And so I always say the earlier you talk and know how it works so that when you're ready to move ahead, you're in a great position to just get approved. I mean, one of them that's building right now, I have been talking to him for probably 2 years, and he's just now pulling the trigger, and he's ready to go.
Yeah.
But he's done exactly what I've done. I've had ones that come to me, and they're going to build today, and I go, you're not there yet, but do X, Y, Z, and come back to me in a year, and let's talk. And they've been there because they've listened.
If they were to want to meet with you, what kind of documentation, or meet with a lender, what kind of documentation does somebody need to get together?
It probably it differs depending on what stage they're in. So if they're just kind of fishing to get information on it, I personally just do a verbal conversation with them to just kind of go over the figures. How much do you currently make? What's the potential to make more? Are you self-employed where I need that 2-year history? Those kind of things, go over it all. If they're ready to build in the next 6 months, then I'm going to be, who's the builders you're thinking of? If they don't have any, I'll give them a list of at least 3, sometimes 5 to 10, depending on, you kind of know what builders like to build and what price point and where they're going to be building. And that differs on what builder may want to do that there. And so it's kind of connecting them with those builders so that they're starting that conversation. The hard part with construction is I could have a customer come to me today and say, I'm ready to build, and I think it's going to cost $400 to build this house and the land. And then they sit down with the builder, and the cost is $550,000. Now we're starting all over because I can't really approve them until I have that cost estimate in hand. And know what the actual cost is because it changes.
Yeah.
So if they were to sit down with the builder, they have to have a detailed cost estimate to know what I can even bring to somebody to consider a construction loan.
Yeah. I mean, they would sit down with the builder. The first step would be looking at plans. Does the builder already have some plans for homes they've built in the past that are acceptable to them, or do they need to hire an architect and draft up the plans? And then after that, the builder looks at those plans and sits down with the clients and say, okay, how are we going to finish the outside? Is it going to be stucco? Is it going to be, how's the roof? Is it, asphalt, or is it wood? And they put that cost estimate together. And I always require that the builder, if the builder doesn't, then we add in contingency. And that's where the builder is estimating today lumber is going to cost $25,000. But let's look back at COVID.
Yeah.
COVID happens, and construction cost all across the board just went up so much. And so if you had started that construction project in fall of 2019 and then COVID hit, 90% of those were over budget by the end. Yeah. And the builders, they have line items and they'll say, these aren't firm. This is what we think it's going to cost. But
And nobody
things
could have
change.
predicted that either.
No. And so it's just, and then one thing I didn't throw into the ring is, and it varies from bank to bank, what they call it, is if I find a house and maybe it needs a lot of work.
Yeah.
Some people call that a renovation. Some call it a rehab. And some treat it as a separate type of loan. And some people treat it under their construction threshold. And so that's another option is you find a house, but it needs a lot of work done to it. We look at it the same way as construction. The reserves, getting a cost estimate, getting an experienced builder, and so forth.
Yeah.
The rehabbing a house, that's a great one. I really like that. What about people are into minimalist living? Is somebody that has some land or buys some land, if they want something, maybe not a tiny house, but very close, or even the barn dominium, which is very popular. Does that change anything, or is it still pretty tied into the traditional process?
It depends on the lender, to be honest with you. Some lenders will not do barn dominiums. Some lenders will. I would say the Midwest does those much more than the two coast. And so that's, we see those a lot in Kansas. But the first thing I will do, not as much with the barn dominiums as I will with not necessarily a tiny house, but a pretty small house, is I will go in and research the subdivision. I will research the county, and I will make sure that house can even be built there. I had a couple buy a house it was in Leavenworth County, and it already had a house on it. And they were planning on leaving that house and building a brand new house beside it so that a parent could live in this one. Well, some counties don't allow that.
Yeah.
So it's important for that to be researched. Some customers will do it on their own. I always research it myself on top of that, just to make sure. The appraisers do a good job of researching that when they do appraisals, to just make sure that what they're appraising can be done. And, but that, I would say that's the number one key is, can it even be done?
Yeah.
And then going from there. I'd hate to buy a piece of land and then say, oh, I'm going to build this, let's just say 800,000 or 8,000 square foot house on it. And the restrictions say it has to be 1,200 or above. And so you just want to make sure they're getting into something they can do down the road.
Yeah.
And so it's a lot of research. And then there's some counties, I believe Douglas is now 5 acres or more in rural areas to build on. Used to be 3. I believe that changed a few years ago.
I don't know
unless
if we
it's
want to put this in it, but I think unless it's grandfathered in, it can. But I think anything that's a new parcel has to be at least 20 in Douglas County.
Okay.
Might be wrong. That's why I don't know if we want to put that part in there.
Yeah. Well, I think
we can fact check that at some point, or if anybody listening wants to fact check,
I know it's less because I'm doing one at 8 right now that it has approved permits. So I believe it is 5 or 10, but I'm leaning towards 5. But I have another county adjacent, Jefferson, it's 3. And so it's knowing, okay, if I'm buying that parcel of land in Douglas County and it's only 3 acres, can I build on it? And all it takes is a call to the zoning department. And I love the zoning department. I mean, I've worked with them through the years and built that relationship. So when I call and ask a question, they'll pull it up and answer the questions. And then that way I'm educating the customer before they put a lot of money into a piece of land they can't do anything with.
Yeah.
Had landlocked, if you know what that is, where they can't even get to driveways or get to the house if they build it. You have to look at everything.
And that's a huge problem with title too.
It is.
Yeah.
Yeah. So
let's get into a quick advice segment before I get into fact or fiction.
Okay.
And then, because I feel like we could just keep talking about
I can talk about construction forever.
All this stuff.
Yes.
So we could maybe even have a little follow-up. If people have questions that weren't answered, you can comment here. We'll get with Michelle. We can create like a little spreadsheet or something. And just let us know once you're listening to this. But what is the smartest first step someone should take if they're even thinking about building?
It's getting with a lender to start if they're needing financing for it, to make sure they're prepared for when they're ready. It doesn't matter if it's 6 months down the road, 2 months down the road, 10 years down the road. It's a totally different animal, as I said, and so you got to get prepared for it. And I think I've said it a few times, build up those reserves.
Yeah.
One mistake you wish borrowers would stop making with construction loans?
Most of the time, if you work with good, experienced builders, you don't run into this. But I have through the years where the cost or the change orders happen. Customer thinks it's my house. I can go in there and change it from wood floors to X or vice versa. And it's not communicated to the lender. So I would say the biggest mistake is the lack of communication. I don't want to hear from a customer just once a month when they need money. I'm basically talking to them on a regular basis. And so I would say communication. The other thing is don't start any work.
That's what I was going to say. I have one to say too, because I had a couple of people contact me after they started work.
Right.
And it was so far along, like they'd already poured the foundation, everything, that we couldn't do financing on it.
So let's talk about that a little bit, because that goes back to lien waivers. So I can give you a couple scenarios. So customer goes in, does land improvements, does the driveway, starts the foundation work, and then go, oh, I better get a loan, even though I have a lot of money to start this work. It depends on the lender. Some lenders, it's a hard no. If they go out, take a picture, and there's anything, dirt's even moved, you're out. Some lenders are flexible on that. And so it also depends on the borrower, because what the lender is concerned about is there any chance that work done before that construction loan was done is not paid, or a lien could be filed, because that lien will take first possession over the loans the bank has. And so I had a customer. I was at one bank building a home in Fall Creek. So we're not talking small home.
No.
It's probably a 2-year project. And I changed banks. And made me happy. They came to me and said, I want to move the construction loan, probably 50% done, to the new bank. Pretty strong customer. And so I go to the loan committee and ask, can I do this? And they're like, we normally say no. And I say, but if I'm willing to work with the builder and find out every contractor that's already done work and get a lien waiver, can I do it? And they said yes. And I went out and tracked down every lien waiver, got it signed, just so I could get that nice big loan.
Yeah.
But some banks won't allow that. I do have one now where the customer already did a little bit of dirt work and, very strong customer. So I went and asked, and they said, sure, just get the lien waivers. Yeah. I've been at another bank where, nope. I had one couple. It was a weird situation. Their old house had burnt. They wanted to build a new house. So they had insurance proceeds. So they were funding the construction with those insurance proceeds. And then they were like, oh, we got to get a loan for the rest. I couldn't do it. It was 90% done. And if you can imagine all the lien waivers during that time, and you're talking 9-10 months of work, that's a lot of lien waivers.
Yeah.
And so I think, I was only going to do what was left. And so I referred them to a bank that could. And so that's one thing. It's really nice in Lawrence is it's always impressed me that the lenders here, everybody thinks we're so competitive. We actually work with each other really well. Yeah. And so I have a really good pulse on what each bank can do. And so if it's something I can't do,
Send it to someone.
but I know
can.
Lexie's bank can do it, I'll refer it. And I'd rather refer them than just say, sorry, I can't do it, and send them on the road.
Yeah.
And
we all want to be helpful.
And so it's kind of getting a hand on how does other banks handle construction, especially when work's already been done. But lien waivers are a hard thing. I mean, I had a project where it happened to be a custom in the builder's name, and builder paid every bill as billed. However, it was for construction, flat work. So he pays the contractor who got all the concrete from the concrete company. That contractor, the concrete contractor, did not pay the person who provided the concrete. And we're about a month from in financing, and I get notified there's a lien filed against the property. And so I contact the builder and said, hey, we've got a lien problem. Did you pay? And he provided evidence. I don't even know if he had to provide, the checks ran through our bank, and so we could see he paid. And so I was like, So I got a hold of that contractor. And he goes, oh, no, I haven't paid it. And it was during the economic downturn of, 2008 to 2012 time period. And I said, you'll have that paid this week. And he did.
Yeah.
And then I had to get a lien waiver from the county and reassure those customers that they're going to be able to convert it to an end loan.
Yeah, I thought they'd be good to go.
Yeah. So lien waivers, you can do as a lender everything you're supposed to according to policy, and you will get surprises on construction. So
let's do a quick fast action round.
Okay.
Construction loan addiction, fact or fiction. You can add things if you want or not.
Okay. Fire away.
Construction loans are only for luxury homes.
False.
You need 20% down regardless.
False. Depends on the bank.
Construction loans are way riskier than buying an existing home.
I would say that's true.
If you're pre-approved, you're ready to start building.
False.
It's easier to finance land and construction together.
Are we taking this from the customer's point of view or the lender's point of view? I would say that is probably true. It's a one step, and you're only doing one set of paperwork to finance the land and the building together versus two sets of paperwork. And different loan to values on those two.
Yeah, different ones. Well, sweet. Thank you for joining us. What do you want to leave everyone with?
I would say, hey, construction projects are fun. You're getting the home of your dreams. You're picking things along the way that you love. But the key is communication and preparing as soon as you know that's the route that you want to go. And just get with a lender. And even if I'm not the lender, if you need advice on who might be best for your situation, I'm happy to give names out.
Thank you.
Thank you so much for joining us, Michelle.
Sure.
Terrific information.
And thank you to the Lawrence Public Library for letting us use this space. And subscribe, share for future episodes. Michelle, we're starting to say this on every episode.
Perfect.
You got to do the ask.
That's right.
That's right.
But okay. Thank you very much. Signing off.
Thanks for joining us on Lawrence Real and Local Keeping It Real podcast. We appreciate our guests taking the time to join us. Don't forget to subscribe and leave a review if you enjoyed today's episode.
For more information, please visit us on the web at www.lawrencerealtor.com. And remember, whether you are buying, selling, or simply dreaming of buying your future home, we're here to help. Until next time, keep it real.
And happy house hunting.